Hello, good morning, and welcome to this MEED live webinar on the Middle East and North Africa's oil and gas projects market for the 2026 and 2027 period. I have the pleasure of welcoming you as the host and presenter for this live webinar. And thank you for tuning in from whichever part of the world you may be doing so. Please, while we wait for a few more minutes for other people to join in and take their places, I would urge you to type in your name, the company that you represent, and the city or country you may be tuning in from. That'll be very much appreciated. So some of you might know me already, but just as a matter of introduction, my name is Indrajit Sen. I am the editor for the oil and gas coverage at MEED, which we are based in Dubai. So I've been covering the oil and gas projects market for more than a decade now. With MEED, it's been almost 9 years, and what a journey it has been. Lots of ebbs and flows over the years, and there has never been a dull moment, to be quite frank. We will wait until 11:05 to begin. Like I said, we will let more people join in and settle down in the meantime. Thank you very much to everyone who's made their way in, and a very warm welcome. Just a disclaimer right at the start, I am a bit under the weather, so forgive me if my voice does crack up during the course of this session. Also, very importantly, if you see the QR code on the screen at the moment, you can scan it to get a copy of the presentation that will be delivered to you during the session. So don't worry, no need to take pictures, no need to take screen grabs. It will be delivered to you in your inbox at the end of the session. So please sit back, relax, and interact. That's very important for a live webinar. Flood the comment section or the dialog box with questions. I'll be very happy to take them throughout the course of this presentation or towards the end of the session. Thank you. I can see someone joining from as far as Kazakhstan. Very warm welcome to you. Some of whom you have joined, I know already. Hello, Sinosh. Welcome to our Saudi participants as well. Right. So, while we wait for others to join in, let me kind of try to summarize what I'm going to talk about. So over the next hour or so, I will try to provide a summary of the MENA oil and gas and petrochemicals market, offer a glimpse of the main mega projects, including project programs, analyze active contract awards and spending to date, and highlight key contracts to be tendered and awarded over the next 18 months. So that's the period of focus from now until the end of next year. And like I said, please feel free to ask questions, and I'll try my best to answer them as and when I can. And we are just seconds away from cracking on. Right. You can see a steady and decent attendance so far. So thank you to everyone who's tuned in. Okay, I think we are past a viewership of 150, which is very pleasing. Someone has just joined us from Spain as well. Buenos dias to you. Elena. Right. Let's start with the presentation then. Wonderful. So a very warm welcome once again. And thank you very much for taking your precious time out to join the session. Now, as I said, over the next hour or so, I'll try to summarize the projects market in in the Middle East and North Africa region. And again, Q&As form a very important part, so please feel free to participate in the Q&A session. What a time to be discussing the market, really. This year has been sort of the most volatile year for oil prices, with Brent seeing lows of around $60 a barrel from at the start of the year to going to historic highs of $120 a barrel during the peak of the US-Iran conflict. The last time I checked, I think, which was at the start of this webinar, 11 a.m. UAE time, I think Brent was trading at about $87 a barrel. Oil and gas supplies through the Strait of Hormuz continues to remain quite curtailed. They have resumed, of course, but it's a lot better than what we were seeing at the peak of the conflict during March, April, and May, where supplies were grounded to almost to a halt. There was no passage of hydrocarbon supplies for months, and that led to the oil price spikes. And that definitely has had an impact on project spending. And we shall take a deep dive into how it has impacted projects, the level of investments, what the major national oil companies and even the IOCs, the likes of Total, Shell, and BP, are sort of positioning themselves for capital expenditure during the presentation. But before we begin, it's very important to mention that the purpose of today's webinar is to mark the official launch of our new comprehensive report on the MENA oil and gas market for the 2026 and 27 period. It is an exhaustive research work on the oil, gas, and petrochemicals market in the MENA region, prepared by a team of analysts. We launch this report annually, that's once a year, and it is quite a deep dive into the projects market, and there is a team of experts who work behind it, myself included. So do make sure to grab a copy of this report to help yourself understand the project's landscape, directional focus of client investments, to be able to make informed decisions. Try not to rely on a lot of AI-generated posts that does around on LinkedIn and other social media platforms, and try and rely on credible and authentic sources for information to be able to make informed decisions. So I'll urge you to grab a copy of that. You can also scan the QR code there on the screen to that'll take you to the landing page where you can just fill out a simple form, and that should grant you access to a few sample pages. So that should give you a glimpse of what that report, what hundreds of pages, has to offer to you. Right. With that being said, let's now dive into the presentation straight. So you can see that it's a very sort of fluctuating level of capital expenditure in the last 10 years, so starting from 2015 to the year-to-date period, so that's August 2026. The region has seen various levels of capital expenditure throughout these last 10 or 11 years. Obviously, starting from 2015 until about 2018, we were seeing a downturn in the oil and gas, mainly the oil prices, which had sort of a direct impact on project spending. So capital expenditure in this part of the world was quite subdued. 2020 onwards, of course, so the years 2020, 2021, and 2022, there was, especially 2021, we saw some major projects being awarded in this region, but obviously those were a few sort of big ticket projects, and overall those years were blighted by the impact of the COVID-19 pandemic. What we saw in 2023 and 2024 were remarkable levels of project expenditure, and that was essentially the pent-up sort of projects pipeline which clients were sort of afraid of, or they couldn't due to COVID-19 restrictions and restrictions on movement of people. The major impact it had on supply chains and the procurement pipeline. So even if they wanted to, they couldn't go through with those project spending decisions. So 2023 and 2024 is when we saw a lot of those pending projects being awarded, and hence you see astronomical levels of capital expenditure in those 2 years. Some of the major projects that were awarded in 2023 were the long-awaited trans-Saharan gas pipeline between Nigeria and Algeria. So that was, I think it was about a $13 billion FID that was made on one section of that major pipeline, which would stretch, I think, more than close to about 4,200 kilometers from Nigeria to Algeria. And then I think the master plan is for that pipeline to extend into the European continent to be able to supply African gas to Europe. And that took a very sort of important role, especially in Europe facing a crisis due to the Russia-Ukraine war and the sort of halt of, or rather stoppage of gas shipments to Western Europe and Central Europe from Russia. We also saw in 2023 the award of North Field South, which is the second phase of QatarEnergy's North Field LNG expansion programs. That was another $10 billion contract awarded to a joint venture of Technip Energies and CCC, Consolidated Contractors Company. What else did we see? We also saw almost a $17 billion project investment made by ADNOC for the Hail and Ghasha program. The offshore package, which was about $8.2 billion, that was awarded to Italian contractor Saipem and Abu Dhabi-based NMDC Energy. And the onshore package was awarded to Tecnimont from Italy. That was the bigger of the two packages, worth about $8.7 billion. Then there were, of course, other major projects that were pushed through, like the Meram project of ADNOC Gas in Abu Dhabi. That was about $3.6 billion. That was awarded to Técnicas Reunidas from Spain and NMDC Energy. And of course, we saw $11 billion investment made by SATORP, which is a joint venture of Saudi Aramco and Total Energies for the expansion of the SATORP refinery in Jubail into an integrated refinery and petrochemical complex. That was worth about $11 billion and for the Amiral project. And I think Hyundai ENC from South Korea had a large, they had the largest share of $5 billion on that project, in the Amiral project. Tecnimont secured another $1.9 billion contract, if I remember correctly, on the Amiral project as well. 2024, of course, was a record year for project spending in the Middle East and North Africa region. I mean, a great deal of projects were awarded, including the Jafurah program, the second phase of the Jafurah program, which had about multiple packages. And I think there were also contracts related to the Ruwais LNG terminal that was awarded that year. That's, construction or EPC work on that Ruwais LNG terminal is going on very well, and we should expect that facility to be commissioned in 2028. What else did we see? We saw the award of major contracts worth about $4 billion for the North Field Production Sustainability contract, the NFPS project in Qatar. That was awarded by QatarEnergy LNG. So essentially, the objective of the North Field Production Sustainability project is to support the constant and incremental flows of gas feedstock to QatarEnergy for the LNG, the North Field LNG expansion program. So, I mean, considering that QatarEnergy is planning to take their current LNG production capacity from 77.5 million tons a year currently to about 142 million tons a year in 3 phases. So that's North Field East, North Field South, and North Field West. You need incremental volumes of gas to enter the grid to be able to be processed into LNG. So that North Field Production Sustainability Project plays a crucial role in that aspect. So we saw that awarded in 2024. Of course, there were other projects that were awarded in 2024, which was the Fadili gas plant expansion program by Saudi Aramco. So that was a major expansion of that Fadili gas plant in the eastern province of Saudi Arabia that had existed. I mean, that was in operation for decades, but needed a major lift as industrial and household demand for gas was increasing in Saudi Arabia. We also saw contracts for the West to East crude pipeline project here in the UAE, and that's currently under construction. And we saw an announcement earlier this year, I think it was just a couple of months ago, when ADNOC announced that it has accelerated work on the project and expects to bring that West to East pipeline online by next year. So that project is seeing EPC work progress at a very rapid pace. 2025, of course, I mean, the drop that you see in contract awards is due to the fact that the previous 2 years saw such record levels of spending. A lot of the pending projects had seen FIDs taken by clients. So that explains that decline in project spending to a large part. And we shall take a look at what projects were awarded last year, a little later in the presentation. 2026, like I mentioned right at the start of the slide, this year projects, I mean, essentially the second quarter of the year has essentially been wiped out from the calendar in terms of FIDs, because there was such massive amounts of uncertainty gripping the projects market. Clients were unsure about which projects to go through with, which projects to hold on to for a better investment climate. So that really has had an impact. Having said that, we are still talking about close to $92 billion worth of capital expenditure on projects last year, and close to $53 billion worth of capex so far this year. The year is far from over. We traditionally get to see a lot of project award decisions taken in the last quarter of the year. So there's still about 4 months to go, and there is an expectation that this year might match the capex levels seen last year. So stay tuned for that. I'll move on to the next slide, and this is a comparison between the regional countries as to the project spending that has been made throughout the last 10, 11 years. And it comes as no surprise that as the largest oil producer and the biggest economy in the region, Saudi Arabia has dominated spending, while the UAE and Qatar sort of closely follow the kingdom. That massive spike that you see there in 2019, that was the award of $15 billion worth of contracts by Saudi Aramco for the Marjan and Berry field developments. So that was the largest project investment decision taken by Saudi Aramco in many, many years. So that explains that big spike in 2019. I went through quite a lot in detail about 2023 and 2024 in the previous slide, so I'm not going to talk about that again. 2025 and 2026, we shall have a closer look in the subsequent slides. So yeah, that explains the sort of investments made by oil and gas companies in each of the regional countries, and you can sort of take a closer look at that slide when you have the copy of the presentation. Having said that, I will move on to the next slide. And this is a very interesting comparison to make. So the chart on your left shows the MENA oil and gas and chemical projects which are currently under execution. So those are projects for which the main contracts have been awarded, the main EPC contracts, and they are currently in the EPC execution phase. So what do we see here? The value of gas projects on the pie chart on your left is considerably larger than oil and chemical projects. It's about 56% of projects on the gas, upstream, midstream, and downstream sort of gas processing segment. We have about 30% in oil and about 14% in chemicals. The pie chart on your right sort of gives you a completely different picture altogether. And it might come as a surprise that we expect a majority of the planned capital expenditure in future to come into the oil segment. And what we're trying to say is the value of oil projects surpasses the other two sectors. And does this mean a renewed focus on oil production? I think so. And this is mainly because there is a strategic, I wouldn't call it a shift, but rather course correction among major NOCs, especially in the Gulf, to try and utilize the period of the remaining period for peak oil demand as and when it comes. So by some projections, it may come as early as 2040. Some even liberal estimates suggest that peak oil demand may be as late as 2060. Whatever it is, with a lot of oil fields maturing in the Middle East and North Africa region, and especially with certain countries like Iraq and Libya, who had sort of fallen behind in the race due to conflict and war, they are entering the fray with a lot of oil project decisions as well. So that might be, in our best estimate, lead to a sort of a prolific period for spending in oil projects from now until the end of the decade. So a very interesting comparison to make. Now, like I told you, we will now take a look at the major MENA projects that are under execution in the region. So we've discussed this before as well, that regional energy producers have spent tens of billions of dollars on oil and gas output capacity increase projects since 2020, and that includes all three segments, upstream, midstream, and downstream, which is the largest project that's currently under execution. Of course, that's the $13 billion North Field East LNG processing trains that was awarded to a joint venture of Chiyoda Corporation from Japan and Technip Energies from France in the year 2021. So that was, I believe, the single largest contract awarded in Qatar in its history. And I think that surpassed the Pearl GTL contract that was awarded by Shell, may have been 2010 or 2012. Correct me if I'm wrong. We already discussed the Sonatrach and NNPC Trans-Saharan gas pipeline. That is a similar level of capex that was awarded in 2023. I also spoke about the North Field South development, which was awarded to a consortium of Technip and CCC. And then we've also spoken about Halen Gasha, which happens to be under execution, awarded in 2023. What else? The North Field West development. That's very, very interesting. That was awarded this year in February. And the award of that contract to a consortium of Technip Energies, CCC, and Gulf Asia Contracting came within a month of Qatar Energy awarding the feed contract for that project to Chiyoda Corporation in January. So within a span of 30 to 40 days, the project went from being in the feed stage to the EPC stage. I mean, obviously, the understanding is that the client had been in discussions with their preferred contractors for a while. Otherwise, it's just simply inexplicable for a project of this size and scope to move from feed to EPC in a month's time. We also saw the Al-4 refinery being awarded in Iraq in 2024. That's about an $8 billion contract, and that was awarded by South Refineries Company. What else? Ruwais LNG terminal, I also spoke about. That was awarded in 2024 and currently happens to be in execution. And then, of course, some major projects awarded back in 2018 in Egypt in the form of the oil refining and petrochemical complex in the Suez Canal Economic Zone, the SE zone, if I remember correctly. And then there was the Nasiriyah integrated project that was awarded in Iraq. Right. That being said, Let's look at some of the major contractors who are executing these projects. And obviously, as has been the case in the region for decades, Asian and European contractors continue to dominate the regional market, with Saipem leading by a country mile there. And this is essentially a chart of the current volume or value of projects under execution by contractors, and that's a list of your top 10 in the region. So Saipem's order backlog of projects under execution, the value of projects under execution, is close to about $180 billion. That's a staggering number. And it should come as no surprise, because they continue to sort of have a hegemony on the market in Qatar. They have executed projects to the client's satisfaction since starting from the previous decade up until now. They've almost sort of dominated the different phases of the North Field production sustainability, having won, I think, 4 major contracts, to my mind, of the various projects, various contracts that have been awarded by QatarEnergy LNG. What is surprising, though, is the rise of Larsen and Toubro from India. I remember doing this webinar exactly a year ago from now, and L&T was at the time in the 5th or 6th position, and from that place to go into 2nd position in a year's time is a staggering achievement. They have done remarkably well in Saudi Arabia. They've won contracts in the Jafurah program, the various expansion phases. They've secured contracts very recently this year in Saudi as well. In Qatar, that's been a new market for them. Again, a major contract worth $5 billion in the North Field production sustainability project. I think it was COM4 and COM4A and COM4B, the combined packages. That was about $5 to $6 billion in QatarEnergy LNG. And of course, they've made forays into the Abu Dhabi market as well. Recently as a couple of months ago, winning a major contract from ADNOC for the Sheikh gas cap project, one of the packages there. So L&T's rise has been remarkable in this market. Technip Energies continues to be in a very strong position. Not only are they a major player in the EPC segment, but I think they have been expanding their presence in the engineering segment as well. In fact, as recently as yesterday, Technip announced that they had secured a detailed engineering contract from L&T for the Sheikh gas cap project, the package in which L&T is executing the EPC works with Lamprell, who are based out here in the UAE, as well as, I think, headquartered in Saudi Arabia. McDermott, after sort of falling off over the last few years, has seen a sort of resurgence, securing a major contract in the Sheikh gas cap project as well. They've announced that officially. They've also won some major contracts in Saudi Arabia, not so much in the offshore sector, but in the Dora gas project fairly recently. We will discuss that at length a little later. The Koreans and the Japanese contractors, namely Hyundai E&C, JGC Corporation, and Samsung E&A, hold very favorable positions among clients out here in this part of the world, not just in the GCC, but beyond, in the Maghreb region, in Iraq, in Egypt. And that is thanks to years of a very rich legacy of executing projects. They hold a very solid track record of delivering projects to perfection. NMDC Group, thanks to its major contracts, with ADNOC Gas, with ADNOC Offshore, and various, including ADNOC Onshore as well. They have a solid order backlog, and that includes their projects in the offshore market of Saudi Arabia. They have won a few sort of CRPO tenders from Saudi Aramco in recent years. Técnicas Reunidas, which I don't think was even there in the top 10 list last year, they've made their way into the list of the top MENA oil and gas contractors this year, and we shall try to understand why as we go through the projects list in the next slides. So the Spanish contractor has been extremely successful in the last 18 months, and that's not just in one market. So they've definitely created a solid position for themselves in Abu Dhabi, but also in markets like Saudi Arabia, where they had won the entire third phase of the Jafurah expansion program from Saudi Aramco. That was about a $3 billion contract. So yeah, they have found success quite recently. And of course, the Chinese contractors tend to have their own share of the order backlog in this part of the world. So CPCC is the largest among them. And there are, of course, other Chinese contractors, but CPCC continues to be the largest of them all. Right. Now let's take a look at the major planned projects in the MENA region. So we sort of discussed the projects that are under execution. This is a list of projects that are yet to be awarded. So they are in various stages of project, the pre-execution phases, like from FEED to main contract bidding, to main contract pre-qualification, to bid evaluation. And essentially, these are projects that are expected to be awarded in the remainder of this year and next year, throughout the course of next year. The biggest happens to be, as per local news reports, the Africa Atlantic gas pipeline section. This is, of course, the onshore section. There is an offshore element attached to this project, but that might come at a later date, and of course needs a lot of cooperation from the European Union, because that's the part of the pipeline network that will connect the African continent, particularly Morocco, until Spain, and then further beyond for gas supplies. But the one that's currently under focus is the onshore section of the pipeline, and that's being led by ONHYM in Morocco and NNPC, the state oil company of Nigeria. So that's under the main contract bid phase. The contractors are sending in their proposals as we speak. That's estimated to be worth $12.5 billion, although that value is subject to change or revision as we see proposals being submitted. So there might be budgetary constraints. There might be other sort of geopolitical issues that may impact the future of this project, but be in no doubt we will see the light of day with this project, if not this year, then certainly next year. What's interesting is after awarding contracts for several chemical plants in the first phase of the TA'ZIZ Industrial Chemical Zone in Ruwais, Abu Dhabi, TA'ZIZ is now already planning for the second phase of that, the specialty chemicals production zone in Ruwais. So that's the phase 2, which is about $10 billion officially announced. TA'ZIZ has even gone as far as joining hands with Alpha Dhabi Corporation, which is a local Abu Dhabi-based sovereign investment fund. So the investment is secured. I believe they have also signed feedstock agreements for as and when the chemicals that have been earmarked for production comes online. So those feedstock agreements for some of those chemical volumes about to be produced have already been secured. We talked briefly about the North Field West LNG development, which was awarded to Technip, CCC, and Gulf Asia Contracting in February this year. The project that we are now talking about is the offshore facility. So again, to support the LNG expansion program, you do need a lot of associated offshore and subsea infrastructure. So that's essentially the contract for that. In fact, the bids for, I believe, production deck modules and subsea pipelines are due to be submitted in a few days from now. I think the current deadline is the end of this month. So that's another massive project at hand, so close to about $9 billion, which is in the main contract bid submission phase. We saw a major contract awarded in Egypt in 2018 for a petrochemical complex in the SC zone, the Suez Canal Economic Zone. We are now seeing another major petrochemical complex being developed by the Petroleum Ministry and the Ministry of Public Works in Egypt. That's currently in the FEED stage. Of course, to expect an EPC award for a project as big as that may not be feasible this year, but we can expect a positive FID decision on that project next year, perhaps. Refinery projects in Iraq continue to move at a certain pace, and we are now talking about the South Basra refinery expansion, which currently happens to be in the FEED stage, estimated to be another $6.5 billion, and expected to be awarded next year. Syria has made a comeback of sorts into the projects market, so that there's been a sort of a turnaround for them, especially with a new government in place now and things getting back to normal in terms of project decisions. So that's very good news for the region. And we can see the Homs oil refinery, which happens to be in the main contract bidding stage, believe it or not. And we might be even talking about an EPC award by the end of the year, which will be a significant leap forward for that country, especially given the circumstances that the country has faced since 2011. Now, this is the next project on your chart is a new LNG export terminal that ADNOC is planning to build on the east coast of the UAE. This is a MEED exclusive news story that we reported in June. And I mean, we do not exactly have an estimate of how big this project could be, but based on the Ruwais LNG project and considering the capacity is about 4.4 million tons a year, that's the planned output capacity. We could safely bet that this will be in the $5 to $5.5 billion range. And ADNOC is really fast tracking this project. Of course, they haven't specified the location, but it's quite understandable that Fujairah might be the location that they select for this planned LNG terminal. Of course, with the crisis around the Strait of Hormuz, the importance of the east coast of the LNG, which offers ADNOC direct access to the Arabian Sea and Gulf of Oman, has found critical importance. So hence, I mean, that sort of explains the ethos of that project. We have exclusively reported that the FEED to EPC competition that ADNOC has undertaken for this project has progressed to some measure, and they have now selected contractors in a set of 3 contractors to undertake the FEED works on this project, and which means that once they complete the FEED stage, the chosen contractors, one of those 3 will be selected to execute the EPC works on the project, and that could happen as early as the end of this year. So considering FEED has already begun, and this is a fast-track project of high value to ADNOC, let's see what the remainder of this year brings for this project. Now, there are a couple of projects mentioned in this list that relate to the liquids to chemicals program of Saudi Aramco. In the previous years, obviously, we've seen a lot of enthusiasm and a lot of hype, if you may, for the liquids to chemicals program. Of course, that sort of slowed down in the last 2 years as a lot of pragmatism and a sense of cautious spending has set in Aramco. But having said that, I mean, that doesn't mean the projects have been scuttled or shelved. There are a couple of projects for which Aramco has tied up with Rongsheng Petrochemical from China, and that's the expansion of their refinery in Yanbu, I think. So that project happens to be in the FEED stage. Expect an EPC decision to be made next year as the FEED reaches completion and the main contract tendering process is completed. Similarly, for the Yasrif petrochemical complex expansion in Saudi Arabia, that's in Jubail, and that also happens to be in the FEED stage and might see a similar timeline with EPC award expected for next year. Right. With the first half of the presentation done, I would like to play a little game with you in the form of a poll question. Ideally, which industry sector do you expect the MENA energy producers to spend the most on from now until the end of the decade? Do you think it's going to be in oil? We saw an interesting comparison being made in the form of those pie charts. Or do you think it's going to be gas, which of course includes LNG? Or is it going to be petrochemicals and chemicals, in your opinion? So I will wait a few seconds for you to cast your votes and see what the mood of the room is like. So it comes as no surprise that a majority of you, close to 60%, believe a bulk of the spending is going to be on gas and LNG projects. And of course, the ADNOC's planned investment on the East Coast LNG terminal being a massive case in point. There are similar plans underway in other countries as well, especially around the GCC, in Oman, and of course in the North African region. We talk about the planned pipeline to Europe, the cross-African country pipeline. So yeah. All right, thank you very much for casting your votes. I shall now crack on with the rest of the presentation. And let's take a look at the projects that are under execution in Saudi Arabia. Now, this is the section of the presentation where we look at some of the major countries and the projects that are underway or planned. We start with Saudi Arabia, the biggest of them all. I sort of briefly alluded to the Dora gas field development program. This year has seen a massive decision being made in the form of the contract awards for different packages of the Dora field development program. So the award of the two offshore packages and one onshore package of the Dora program by Kavchi Joint Operations, which is a joint venture of Saudi Aramco and Kuwait Petroleum Corporation, is a very bold move and shows a lot of resolve, especially at a time when the conflict is still brewing in the region. Iran continues hostile actions against its Gulf neighbors. So it is, the contract awards are not just a project spending decision, it is a show of strength. And we saw that the biggest contract was awarded for package 2B, which is about $3.4 billion. And MEED exclusively reported that back in June, or may have been July. Then package 2A, which is another $1.5 billion, that was awarded as well. And then package 3, which is the onshore gas processing facility, that was awarded to Technicas Unidas from Spain. That's again another $1.65 billion contract. And you can see that McDermott secured offshore package 2A, which is valued about $1.5 billion. Again, L&T and Saipem, or Saipem and L&T, whichever way you want to see it, they secured the largest package of the Dora gas field development program, worth $3.4 billion. I think Saipem's share was $1.8 billion, and the remainder of that was for L&T. What else do we see? So there was also the fourth phase of the Jafurah gas unconventional gas program that was awarded to L&T as well, $1.5 billion worth. So like I said, a little earlier, this year has been exceptional for sort of L&T, especially in Saudi Arabia. And then, of course, the offshore market in the Kingdom of Saudi Arabia continues to grow by leaps and bounds. We saw, the Aramco spend almost $11 billion on offshore EPCI contracts last year, which was more than double of what was spent in 2024. And the expectation is that they would almost match that level of capital expenditure on offshore EPCI contracts this year as well. We also saw the award of the Shedgum and Uthmaniyah plants, the contract for the Uthmaniyah plant gas compression program, pardon me, that was awarded to a joint venture, Saipem, and local contractor Nasser Al Hajri. Again, close to about $1.5 billion worth of contract that was awarded. And the Shedgum and Uthmaniyah gas plants, as most of you correctly predicted in the form of future project spending, that's another sort of gas investment that's being talked about. So it's a massive program. It's about 9 EPC packages. So the main package for the Uthmaniyah gas compression project that was awarded earlier this year, we expect the one for Shedgum to be awarded fairly soon as well, maybe by the end of this quarter. And then the other remaining or associated packages of that program be awarded by the end of the year. So the discussions between Aramco and the bidders are in a very advanced stage. If you look at the planned projects in Saudi Arabia, I referred to this a little earlier. The largest capex program is the liquids to chemicals programs. Of course, Aramco has had to tone down, the dimension and the size and scope of this program a little bit. The target still remains in place, which is a conversion of 4 million barrels a day of its oil production into high-value chemicals. So traditionally, what has happened is a lot of oil production has gone into, gas plants, power plants to fuel, to channel electricity, or it's been exported. The way it's happening now is Aramco wants to derive a lot more economic value from the oil that it produces. So that's the entire crux of the program. There were 4 elements to it. We haven't heard much about, the other 2 projects, barring the one that I mentioned about the Yasref refinery and the Sasref refinery. And then, of course, we also recently reported, I'm not going to reveal the front runner. You'll have to log on to MEED.com to be able to find out who that preferred contractor is. But the news is that Aramco is getting closer to awarding the 5th expansion phase of the Jafurah gas expansion program, the unconventional program. So that currently happens to be in the bid evaluation phase, but won't be for much longer if we are to believe our sources. So we may see that contract being awarded again within this quarter. The offshore project spending program in Saudi Arabia continues as always. There are about 5 to 6 CRPO tenders which are currently in the bid evaluation phases. So when I said the offshore capex this year by Aramco could match last year's level, there's the evidence, 5 to 6. And if we add up those numbers, that easily takes this year's project spending level to last year's level. Let's take a look at the country where I am in. So projects under execution in the UAE. We saw major FIDs taken by ADNOC Gas in the form of the 2nd and 3rd phases of its rich gas development program. So $3.9 billion worth of contracts for the phase 2 was awarded to Wisen Engineering from China. And that essentially, is the development of a 7th gas processing train at the Habshan facility. And the phase 3, which is building of an NGL fractionation train, in fact, the 5th train, that was awarded to Tecnimont. and that's about a $4.3 billion contract. So that those two FIDs were taken earlier this year. We also had $7.5 billion worth of contracts been awarded for the Lower Zakum program last year, as well as close to about $4 to $5 billion awarded for the Upper Zakum field development program earlier this year. And I've got the names before you. So the Upper Zakum sort of program was awarded to, the project is spread across three packages. The first package went to Technicas Reunidas, the second package was to NMDC Energy, and the third package to, again, Technicas Reunidas. So that explains the ascent of TR into the top 10 projects list, top 10 contractors list, pardon me. And despite, like I said right at the start, despite this being a sort of a subdued year for project spending, every contractor is getting their fair share of work, and it's a very competitive space in the market at the moment, and it's not very lopsided as we are used to seeing in the decades prior to this. So it's a very sort of healthy level of competition taking place. There was also the contract awarded for the chloralkali, ethylene dichloride, and polyvinyl chloride production facility in the first phase of the the Taziz chemical zone that was awarded last year. And before I move to the projects that are being planned in the UAE, a little reminder about the report, the MENA Oil and Gas 2026-27 report. If you scan the QR code, it'll take you to the page where you just have to fill out the simple form, and it should give you access to the sample pages, and then you can make a purchasing decision based on that. What does the report include? You see what's included, and it's a really exhaustive and holistic sort of view of the market, of the projects market. Quite an in-depth, deep dive research. It's got maps, it's got tables, charts, you name it, bar graphs, and projections that are just not made based on assumptions, but rather hardcore intelligence gathering that me and the analyst team do throughout the year. Right. Now, planned projects. I already spoke about the second phase of Taziz that's been planned by Taziz, which is a joint venture of ADNOC and ADQ, and Alpha Dhabi has now joined them as an investor, so that sort of gives it a solid financial backing to the second phase. And the expectation is that there will be 14 new types of specialty chemicals that will be produced in the Taziz zone, which will be double the amount of chemicals that the first phase will produce. So 2.2 million tons a year is the projection for Taziz phase 2. What else do we have in the form of planned projects? There is the Barb gas cap development, which is the next big, or rather the biggest project, or single biggest project in Abu Dhabi in the planning stages at the moment. ADNOC Gas has, they are moving, albeit cautiously, on the FID of this project. And that's essentially been divided into 4 EPC packages, with the total FID expected to be to the tune of $8 billion. So the $5 billion figure that you see, that's just for the main Barb gas cap compression plant. There are, of course, other associated packages, 3 other packages. And the current bid submission for the main plant is currently due for the end of November. So we could expect a positive decision to be made for this project in the first half of next year. I already spoke about that new LNG export facility on the UAE's east coast. What we are now also seeing, and going back to the pie chart about the resurgence, or rather, a decent level of spending on oil projects, is the next phase of the Sheikh long-term development plan. So that's the 2.1 phase, and that's again divided into the onshore and offshore package. I believe the pre-qualification has already been started by ADNOC Offshore. And again, we are looking at EPC contracts being awarded anytime next year. What else? There are a bunch of onshore projects. Of course, this is the list of only the top 10. This list runs tens of other projects. Onshore projects, of course, onshore plays a very important part in Abu Dhabi's oil production sort of puzzle. And then, so there is no surprise that ADNOC Onshore is committing large volumes of investments to develop its southeast in a cluster of oil fields, northeast cluster, and the Barb cluster as well. There's also that Wasset offshore gas development project, for bids for which are currently under the evaluation phase. Right. Qatar is up next. I have spoken at length about the North Field LNG expansion program, as well as the North Field Production Sustainability Program. Those projects happen to be under execution. We also saw major contracts being awarded in the form of the Bul Hanine offshore, oil field expansion that was awarded last year, and then Qatar's version of an NGL, a natural gas to liquids project. That contract was awarded last year as well. So that was to the tune of $2.5 billion. Moving ahead, again, I would urge you to check the news for the Meydan Mazam project. We broke the news just yesterday about front runners emerging for the two packages. I'm not going to reveal the names here. You will have to take time out to go and read the news yourself. What else? There is a major blue ammonia and urea production facility that's being planned in the Mesaid industrial city. Again, the bids were submitted, I believe it was in May. And so that happens to be in the bid evaluation phases. That's just for, the basic estimate that we have. It could be higher. And our expectation is it could be higher. That's a very conservative estimate, the $1 billion figure. And then, of course, there is an expansion project plan for the Lafan Refinery 1, which happens to be in the FEED stage, and I believe is being executed by Technigas Reunidas again. Yes, so that's the Qatar projects market for you. Another poll question, and this might come as very topical to some of you who sort of live and breathe oil and gas projects in this part of the world. Who, according to you, or what, according to you, is the biggest challenge when it comes to execution of projects in the MENA region? Do you think it's a shortage of skilled labor? Do you think it's difficulty in procurement and supply chain? And we've seen a lot of disruption due to the ongoing conflict. Or is it, or do you think it's non-payment and contractual issues with clients? Right. I'll wait for a few seconds for the votes to come in. While I wait for the votes, I think there is a question about digitalization and automation projects in the oil and gas domain. Listen, we do not cover that space too much because our main focus is on the core timeline of a project, from starting from the concept design and pre-FEED stages through to FEED, to main contract pre-qualification, to main contract tendering, to bid evaluation, and then the EPC contract award. Having said that, we do report on major digitalization and automation services that are tendered and awarded from time to time. Although, like I said, it's not the main body of work that we do. However, you can log on to MEED.com or MEED projects to check whatever projects we have in that space. And of course, the report, I'm sure, will have a a lot many sections on that specific domain. So feel free to do that. Right. We have sort of a split house in this one. And I'd say 50% of you are saying that, procurement procurement and supply chain remains a major problem. And it should come as no surprise given the disruption we've seen this year, especially, there have been cases where equipment and critical long lead items haven't been able to reach the project sites on time, leading to delays in project execution, or they've had to be rerouted through Oman, which was largely spared the eye of the storm, as we like to call it. So that's, it is not very hard to imagine that procurement and supply chain issues are the biggest problems at this point in the projects market in this part of the world. Right. I will now move on to the rest of the presentation. And let's take a look at Oman. By comparison to its Gulf neighbors, we've always known Oman to be a slightly smaller market. Having said that, major projects have been awarded in the last 18 months. And you can see that the main EPC contract for an integrated facility to produce gas from the Budua and Tehsil fields was awarded by Petroleum Development Oman to Kuwait-based Petco last year. That was valued at $683 million. That was the first contract won by the Kuwaiti contractor in Oman. And of course, it's a D-boom model contract with a duration being 15 years. We also saw NP from Egypt win the contract to perform EPC works on the Birba gas station in Dhofar Governorate in April this year, valued at about $355 million. In June, OQ Group, which is the state energy conglomerate, they awarded a similar D-boom contract valued at around $300 million to Schlumberger, which is now called SLB, the US oilfield services major. And that involves a further expansion of the oil infrastructure at the BSAT field. Specifically, that involves an oil gathering station to be named Station E, and that's located in Block 60, which is operated by OQ Exploration and Production. Moving forward, in terms of planned projects, Oman happens to be host to another NGL facility, a natural gas to liquids facility in the region. So they are moving forward with building a facility that at Saini Hada, in central Oman, which will extract condensates and transport them to Duqm. That's along the Arabian Sea coastline of Oman for fractionation and export. That's being executed using the feed to EPC model. And again, there has been some recent news that we have published a few hours ago, just yesterday, on MEED.com. I'm not going to reveal the latest here. I'd urge you to go and check the website. Regarding other planned projects, there is this, the new expansion of the Ras Marka's crude oil storage park, again at Duqm. So it's already an operating facility, but I think OTTCO, Oman Tank Terminals Company, they are looking to expand that facility even further. And the increase will sort of raise Ras Marka's total storage capacity to 5.2 million barrels. And that happens to be in the main contract pre-qualification stage as well. Right. Let's take a quick look at Kuwait. Kuwait, we are well aware, has its own pace and way of moving ahead with projects. However, this year has been a particularly year of note for project investments in Kuwait, which has, to be fair, suffered a bulk of the conflict. There have been incessant attacks on major oil facilities in the country. They awarded a $979.2 million, almost $92 million contract to L&T in July for the Jurassic light oil storage and export facilities. The scope of the work includes the EPC of 6 new crude oil storage tanks with a capacity of 618,000 barrels each, along with associated facility. So that happens to be the largest contract awarded in Kuwait since, I believe, the Al Zour refinery project. So that's a major project spending decision that was made this year. Looking ahead, there is the Kuwaiti element of the Dora gas field development program in the form of KGOC, Kuwait Gulf Oil Company, planning a major onshore processing facility, which is estimated to be valued at $3.3 billion. And the tender for that was issued as recently as last week, the 23rd of August, if memory serves me right. So after a long period where the FEED was taking place, and obviously the future of that project was thrown into uncertainty due to the conflict, because you have to bear in mind that the Dora field happens to be in the Saudi-Kuwait neutral zone, but it also, Iran stakes a claim to that. It even calls it by a different name. So it is a project which is quite controversial, and the fact that billions of dollars worth of projects have been awarded for the Dora program this year, and the main tender for the onshore processing plant in Kuwait is out, show that Saudi Arabia and Kuwait are really moving ahead resolutely to execute the project. We also tend to see a few more tenders from Kuwait Oil Company. These are the regular sort of oil field and gas field infrastructure upgrade projects, which some of them being in the main contract pre-qualification stage, some of them in the FEED stage, and then some in the bid evaluation. Obviously, these are charts that reflect only the top 5 in terms of value. There are tens of others that you find on MEED projects and the report that I've talked about. Iraq, if resilience and resurgence are two adjectives I could use, it will be for the Iraqi oil and gas market, which has seen, again, much like Syria, a remarkable turnaround for the last few years after years of conflict and internal strife. We saw a major contract awarded last year to East China Engineering Services and Technology Company, a $2 billion contract for the phosphate fertilizer complex in Al-Qaim region in the west of Iraq. And then that facility will produce about 1 million tons of diammonium phosphate and 500,000 tons of triple sugar phosphate once it's operational. Again, phosphates are very important for farming, agriculture, and definitely in light of food security. So that was a very critical project investment decision that was made in Iraq last year. We also saw remarkable progress last year in the form of contract awards for all 4 main projects of the $10 billion gas growth integrated project master plan that targets the overall development of the Ratavi oil and gas field in Basra in the south of Iraq. CPCC won the largest $1.61 billion contract last May to execute EPC on the main gas processing complex at Ratavi. Looking at planned projects, obviously the other 3 projects have also been awarded. There has been, I think, a contract award for a power station, a solar power station that was awarded by Total Energies. I think it was last year as well. So all 4 elements of the GGIP program happen to be in the EPC execution phase. Looking at planned projects in Iraq, CNPC is carrying out FEED work for the planned South Basra refinery, which I think was reflected in the list of major planned projects in the region, and will have the capacity to process 200,000 barrels a day of oil. And you can see there are other refinery projects in the list of just top 5 as well, including a pipeline network that Iraq is planning between Haditha to Aqaba in Jordan, as well as from Najaf to Aqaba in Jordan again. So the plan is to not just rely on Basra on the Gulf Coast. Again, Iraq is having to sort of circumnavigate the Gulf as well. So if they could use Aqaba on the Red Sea, and transport the oil volumes mainly, but also consider transmission of gas. Those pipelines will hold critical value. We are coming to the end of the presentation, and by taking a look at the North Africa projects outlook. So the North Africa region, from Egypt up until Morocco, happens to be a very interesting market. Each of the countries have a different way of executing projects, but we did see, Sonatrach and PTTEP of Thailand, in the form of a joint venture called Groupement HBR, award a contract valued at $1.1 billion earlier this year to Egypt's Petrojet and Italian contractor Arcat SPA to develop the Hazi Bir Rekais oil and gas field in Algeria earlier this year, that was. And I think there was also an $855 million contract awarded to JERE from China for a project to develop facilities at the Rud Nus gas field and the adjacent Gassi-Tuil gas field in Algeria. So Algeria sits atop vast reserves of natural gas, which it has been developing for many decades. But these two projects are expected to sort of add incremental volumes of natural gas production to the country's grid, which they can also export, the surplus volumes they can also export through the transcontinental pipeline, which is already, some portion of it is already under construction in Africa, and a future connection network to Europe. Going ahead, Libya happens to be the host for the largest project in the North Africa region, believe it or not, in the form of the Melita complex expansion and CO2 management integrated development project, which is estimated to be a combined worth of $8 billion. That's the largest upstream project that's planned in North Africa at the moment. This is being developed by a joint venture called Melita Oil and Gas, which is a JV of Libya's national oil company and Italian oil and gas energy producer ENI or ENI. And you can see various components of the Melita project being in the main contract pre-qualification phases. I believe this project has received support from the US administration as well. I believe Hill International is assisting Melita Oil and Gas in the form of engineering and planning work as well. So definitely we could see major progress being made about that program next year. Right. So that being said, that brings me to the end of my presentation. You have been a very, very patient audience, and I thank you once again for your time. A little gentle reminder about the report, which I have referred to from time to time. It is that report you need to make decisions about which projects to target, which areas of the market you should be going after. It's a list not just of projects, but of patterns, of trends, of timelines, charts, graphs, maps, you name it. It's the thing you need, and you can take a glimpse of what that a report worth hundreds and hundreds of pages has to offer by scanning that QR code, which should give you access to a few sample pages. That being said, I will take a few questions if there are any. There is a question about projects related to automation and fabrication. It's my answer to that will be along the lines of what I mentioned a little earlier. We do not tend to cover sort of those segments of the market in depth. Having said that, you can take a look at the MEED projects database, and of course the report should give you a deep dive into sort of those sort of niche segments which we happen to sort of sideline in favor of the bigger EPC projects. There's an interesting question about bottlenecks on port capacities. How are materials being procured? after Hormuz closure. So Oman is playing a massive helping hand, is what I'm being told, um, in terms of assisting their Gulf neighbors in routing a lot of the procurement and long lead items for projects. So the port of Soha, the port of Duqm, Salalah port, they are playing a very crucial role in channeling some of the the procurement flows. Of course, the UAE's east coast ports, namely Fujairah, Khor Fakkan, they hold critical value in these circumstances. The Kingdom of Saudi Arabia had a tactical advantage in the form of Yanbu port and other ports on the Red Sea coastline up until the point where the Houthi attacks started taking place along the Red Sea coast as well. So they are in a bit of a spot, but then we are hearing about positive developments being made towards opening up of ports along the Gulf Coast. So that problem should take care of itself by the end of the year, is our optimistic prediction. There is a question about downstream rehabilitation projects in Bahrain, Kuwait, Saudi, and UAE. If I understand the question correctly, this is about repair and modification works being carried out to facilities that had been struck by Iranian drones and projections. Again, this happens to be a segment where we have seen the operator, the clients of these facilities sort of already undertake repair works and modification works themselves, or they happen to deploy contractors who are already engaged on site for carrying out these major repair works. So I do understand a lot of facilities, namely the Habshan gas facility here in Abu Dhabi, the Ras Tanura port in Saudi Arabia, Yanbu refinery, Jubail refinery, the entire sort of LNG production facility in Ras Laffan in Qatar. They had been subject to big attacks, and obviously most of the repair works were carried out quite quickly and quite promptly, and we are now seeing most of these facilities come back to operations if they aren't online already. If there is information about a separate tender being put out to market for contractors to come and bid for repairs and modifications, we will report that in future. So do stay tuned to MEED.com and keep an eye out on MEED projects as well. I don't see any more questions coming through. Of course, if there are any, you know where to find me. You have my email. You also have my number. Please do feel free to reach out. I'm quite welcome the idea of having physical meetings as well. So definitely, that is something I look forward to as well. For now, I think this is goodbye from me. You have been a very, very patient audience. So thank you once again very much for your time, and wish you all the best in future with your endeavors in the MENA oil and gas projects market. Thank you very much.